Good morning and welcome back to another East Capital Group's webinar. For those of you who don't know me, my name is Massimo Grassotti and I am part of the investor relations team here. Today we are joined by Jakob Wikander, Espiria's deputy CIO and portfolio manager, Huizi Zeng, also portfolio manager at Espiria, and lastly Dmitriy Vlasov, who is based in Hong Kong, who is senior portfolio advisor for East Capital. Today's event, which will be approximately 20 minutes, during which we will discuss China's Communist Party Congress and how that has evolved, the opportunities in the renewable sector, as well as economic outlook, and lastly, the impact this has on global markets. So without further ado, let's dive right in. Dmitry, thank you for joining us today. There's obviously been a lot happening globally, but China's Communist, so the CPC, has been a worthy headline. Could you briefly describe just what sentiment's been like on the ground and what it looks like from your eyes?
Yes, it's very good to be here today and talk about this really important event. It was a week-long event, but I think and it was a lot of coverage by international media, by local media. But I think if we look at the most important parts of this event, I think there are two of them. The first is the opening address by Xi Jinping. And the second is the election of the party leadership, which is Standing Committee and Politburo. So if you look at the initial opening address by Xi Jinping, it was 2 hours long, and there was a lot of important topics that he covered during his address. Obviously, Taiwan was one of the key topics, reunification with Taiwan, development, economic development, was also very important part of this. Security, I think this time security was actually very important element of his address. So, but in general, there was no major deviation from his previous addresses over the course of the last several years. I think the second event, the nomination and election of the standing committee members, that was also, and it happened yesterday. And what we saw is there are 4 new members of this committee, and out of the 7. And Xi Jinping, he will be general secretary of the party for the next 5 years. But out of the new members, I think there's one candidate, which is Li Qiang, who is Shanghai party secretary. I think that was a very important nomination. Now, since Li Keqiang, who used to be the prime minister, he's not part of the standing committee, he's not part of the Politburo, so it's widely expected that Li Qiang actually will become prime minister during the NPC session in March. So indeed, very important event, and I think now it's over, and the leadership should be focusing on economic issues that are very pressing.
Well, thank you for that. It's good to hear. I think something that was actually lifted in Xi Jinping's speech the other day was also this push towards green, right? And I think one sector that has been very prominent and dominated by Chinese companies is the renewable sector. And it's also been a great generator of alpha if we look across the entire value chain. Could you discuss a little bit if you think this will create more opportunities moving forward as investors start to catch on?
I think the green development outlook has not changed. It's also as important as it has been. So obviously, you have climate transition, you have energy security. Those 2 elements, I think they are overlapping now, and we are very optimistic and hopeful for the future development of this sector. As far as our portfolios are concerned, this sector is very well represented across the portfolios. It's the biggest probably part within our China exposure. We like the outlook for this sector. It's global installations for solar, which are expected to be for multi years. Also wind, which is more China-specific story. We also have very strong installations for the years to come. This year we would have more than 50 gigawatt of wind energy installed. So it's a very interesting sector. And what's really interesting, because now the companies, they are reporting their third quarter results. And if you look in general, it's very, it's mixed picture for the Chinese equities. But if you look at the renewables, they've been very consistent earnings growth and very strong earnings growth. For example, companies within our portfolio, largest wafer producers in the world, LONGi and TCL Zhonghuan, I think they just reported around 70% earnings growth in the third quarter. And with potential polysilicon price coming down next year, which is upstream part of the solar supply chain, we expect actually margin expansion for these companies. And looking at the valuations, it's kind of mid double-digit P multiples, and earnings growth of above 20-25% for the years to come. That looks quite attractive. This is one part of the decarbonization exposure within the portfolio. Also, the EV sector has been very interesting for investments. We have several companies in the portfolio. They also just pre-announced their results. CATL, which is the largest battery producer, had remarkable results with earnings growing 180% year over year. And BYD, which is now the largest EV producer in the world, and they have excellent lineup of cars which are less expensive and probably as good as Tesla's, maybe even better in some regards. They just pronounced more than three times earnings growth. And again, EV sector is one of the brightest grower for the next many years, because penetration of EVs is still quite low in China. This year we would have 6 million of EV cars sold. Next year, this number can be as high as 10%, and with that penetration can be 40%. So still a lot of potential runway for these sectors, and we continue to believe in those, and they're the biggest part of our portfolio.
Yeah, very interesting to hear. And Dmitry, you touched on it a little bit there, but if we could just take a step back and look a little bit more on economic growth just as a whole. I mean, what does the outlook look like? We're coming towards the end of the year now, but what does it look like moving forward now?
Well, the economic picture has been quite complicated in China this year. You may recall at the beginning of the year, the original target for the GDP growth was 5.5%. Obviously, several negative developments happened after that. The war between Russia and Ukraine, one of the factors. Also, the very strict application of the COVID zero strategy actually impacted the economic recovery and sentiment in China. So clearly, these original targets, they're out of the questions. Just today we received the data, delayed data for the third quarter. The economic growth was, slightly ahead of the expectations, but nothing major, in order to get to the 5.5% growth rate as originally planned. So what we think might be happening next year is that China is actually in a very good position to be one of the, maybe even only major economy to have accelerating growth rate, with the potential GDP growing, close to 5%. It depends on the timing of the lifting of the COVID restrictions, because this is now the major variable for the Chinese economy, for the economic growth. So our expectation is that there would be, that in the beginning of the year, sometime in March, we probably should start seeing some of the, the lifting of the restrictions. And depending how quick they would be lifted, the economic growth may surprise on the upside. On top of that, in China, it's right now, China is the interest rates are close to historical lows. Inflation, within China context is not the major problem. It's been picking up a little bit, but it's still very, very low. And then the government clearly, given that economic rebound, the rebound so far has been below expectations, the government will have to come up with more intensive stimuluses in order to support the economic recovery. So, which again, put China in a different camp compared to the rest of the market. So, with economic growth accelerating next year, with earnings potential rebounding, China might be in a good position to rebound from what had been a very bad year for the Chinese equities, especially for the offshore listed stocks.
Great. Well, Dmitry, thank you. It's always interesting to hear from you being on the ground, and we'll come back to you in a minute. But I'd like to turn and now speak a little bit more to Huizi and Jakob. China has been, or it is, the second largest market right now, and it's extremely interesting to hear about how not only this has developed, but also what this means for global markets. How do you believe that this impacts markets as a whole?
Yeah, so as we followed, all these years on China, I think it's undeniable that it has certain economic consequences when it comes to changes of the political agenda, and that relates to the global, value chain as well, as we've seen in the COVID pandemic times, and how China wants to grow in the future also will influence the rest of the economy, and not only through, for example, the commodity prices and etc. So there's various ways that the currently political agenda changes might affect the world's global economic trajectory going forward.
It's always interesting to hear, being a portfolio manager for global strategies. How does this, and also being Chinese native, how does this impact the way that you think? Has it changed at all the way that you look at companies, the way that you look at maybe the macro aspect? Has it impacted your thinking?
Yeah, so certainly I personally have been following this in very detailed level. What has been occupying my mind has been that I see that there is changing stances on the market perception of China as a market at the moment, while the actual risk of the market is not yet well understood. And there is a gap, as we have seen, so that needs to be followed up very closely. And I think that our investment team has been really, updating ourselves on what has been read through on the Congress report. And we have to still watch for next year's meeting, as well as Dmitry pointed out earlier in March, and that will decide on the more specific short to mid-term economic policy-wise, and that can have implications on the global economy. And the second thing that I've been thinking about is also that we cannot only see China in isolation anymore. I think what is happening now is very much a consequence of dynamic due to some certain bilateral or multilateral relationships. And this is bringing us one step back to review, how this dynamic could change the whole economic landscape going forward as well.
Yeah, because it's too big to ignore, right? And you can't differentiate the two.
Definitely.
Jakob, a little more global. If we look really big macro now, there's been a lot of turmoil, and we talk a lot about political agenda, and we've looked a lot at the concern globally. It's been a tough year. Do we think that this will create any stability moving forward? Do you think that the situation with China will this cause even more reason for concern?
So I think it's quite clear that security has moved higher on the agenda, both for China and US, and for China even more so after this party Congress. So I think we can expect continued tensions between US and China, and we know that geopolitical uncertainty creates volatility in markets. But when it comes to the actual fundamentals, as Huizi alluded to, in the end, it's all about the internal growth in China and the rest of the world. And we live in a globalized world, and a lot of the value chain, even for Europe, is in China, and for US as well. So these three regions, US, China, Europe, are very integrated, and for Europe, when we're going to do this transition away from Russian gas, what we do need is we need batteries, and we need solar renewables, and you find a lot of that value chain in China. So I think we can expect some volatility on the markets, but I think companies will continue to act based on economic decisions, and I don't think globalization will end today.
Always very interesting to hear that. Sounds overall a bit positive, no?
Yeah, I think people are worried, and maybe righteously so, in this environment. There's a lot of clouds currently. But as we continue to say in our discussions with clients, is that we shouldn't just expect that what we're seeing today will continue for years and years, that this uncertainty will always be with us. I think if we look further down the road, I think in the end, pragmatism will win, and I think we will at some point enter a more calm environment. That would be good for markets.
Good. And hopefully a little less volatility then. Dmitry, last question, just to round off, seeing as you are there on the ground. It's the ever-eluding question of situation with COVID. How does it look? I mean, we've heard rumors about potential easing, lifting of regulations. How is the situation?
Well, I must say the situation largely unchanged here. So the COVID-0 policy is still in place. It's pretty much enforced across the provinces. So, and frankly, we had not, it wasn't our expectation that the currently restrictive policy will be changed after the Congress, because there are certain preconditions need to be met. Before that, one of those is obviously renewed drive for the vaccination, especially the elders. So we haven't seen this. So meaning before the major lift of the restrictions, there will be this program. But anecdotally, it was actually good to see this last week. What we saw is that number of companies, Chinese airlines companies, they actually increased the number of flights. From very low levels, it was like low single digits compared to the pre-pandemic. Now it's more like mid-single digit, but still it's like almost doubling the capacity for the international flights. That's something which is small step in the right direction. Also, there were internal discussions last week in China that the quarantine that we still have for the inbound travelers, it can be again a little bit relaxed from currently 7+3 days to something like 2+5 or 3+4. I don't remember the precise numbers. So I think those are encouraging signs. But again, we don't expect major lifting of the restrictions, until after the Chinese New Year and the Congress. So I think that would be a more proper time for the government to do that.
All right, Dmitry, thank you very much for your time. Huizi, Jakob, thank you as well for your time.
Thank you.
And thank you to everybody who called in. If you have any questions or would like some more information or set up a meeting with any of us, we are always at your disposal, and you have our contact. So feel free to get in touch with us if you need any more information. Thank you.